Business News now, and Katerina Vittozzi joins me here in the studio. And economists here in Europe expecting some good growth figures.
Yes, it's nice to be able to give some positive news for this Tuesday. Now, official GDP figures for the past 3 months across the eurozone are expected later this week, but an advanced survey by economists here are predicting that it'll be good news, up 0.2%, a lot better than the figures between January and March this year, which showed a shrinkage of 0.3%. And they're saying that this is basically down to good manufacturing data, as the eurozone has shown some tentative signs of recovery over the past couple of months.
And how have the markets reacted? Well,
it's been a good positive start to the markets here in Europe. The FTSE looking currently up about 0.2%. The Frankfurt DAX, however, currently leading the pack just shy of a 0.7%. And in Asia, it's been a bit of a rocky day for the Nikkei. You can see there it's now finishing the day up 2.5%. The Shanghai Composite, which showed some early losses, rallying towards the end of the day's trading.
Well, to Mexico now, and big plans for Mexico to revive the country's energy sector.
Yes, now the energy sector in Mexico has been under state control for about 75 years. And on Monday, the president, Enrique Pena Nieto, he announced plans to open up the state oil monopoly Pemex. Now, he was planning to change the constitution to allow private partnerships in order to explore some of the country's oil and gas reserves. Poor innovation has meant that it hasn't been able to tap into these reserves over the past couple of years, and that is clearly something that the president wants to reverse.
Our energy sector has been legally restricted, which meant it lost dynamism and competitiveness. But despite these circumstances, thanks to advances in technology and new exploration by Pemex, we know that Mexico has the opportunity for new growth in energy.
Well, forget high-speed trains. What about Hyperloop transport? It's not quite Star Trek, but it staggers the imagination nonetheless. A billionaire entrepreneur in the United States wants to whisk passengers from San Francisco to Los Angeles in under half an hour. Nicholas Rushworth has more.
This is Hyperloop. If it ever gets built, it would fling passengers down a vacuum tube between San Francisco and Los Angeles in just 30 minutes. It is the brainchild of the businessman Elon Musk, who founded PayPal, the rocket company SpaceX, and Tesla Motors.
This has cost me a Concorde, a railgun, and an air hockey table.
Despite the laughter, Musk insists he can do it for €4.5 billion. That's a tenth of the cost of California's high-speed rail project. Savings would be made by building a tube above ground on pylons. Passengers would float on air at speeds of up to 1,100 kilometers an hour.
We need to have a breakthrough. We need to have a transportation system that doesn't operate on freeways, that doesn't take freeway laneage, and that doesn't require petroleum to operate it. And that could be Mr. Musk's idea, but he has to prove it.
The Hyperloop concept is being described as open source, meaning that others are free to take the idea and improve on it. If it ever does get off the ground, it'll make a change from the trams of San Francisco.
Well, time now for a look at some of the day's other top stories. And egg farmers here in France will be meeting with the country's agricultural minister later. Stéphane Le Foll is trying to avert a crisis in egg production. Farmers in Brittany smashed tens of thousands of eggs last week, protesting increased EU regulation that's led to higher production costs. A group of pilots at Ryanair have called for an inquiry into the airline's safety procedures. According to a survey by the RPG union, nearly 90% of Ryanair flight staff don't think the company has a transparent policy towards safety. But Europe's biggest low-cost airline dismissed the poll, claiming it was drummed up by officials from a union they don't recognise. And Canadian firm Blackberry is looking for strategic alternatives for its future, including a possible sale. The former smartphone leader's seen its market share wiped out by the likes of Samsung and Apple. Investors seem to like the idea of a potential new ownership. Shares were up 10% at the close in New York.
Katerina, thank you for that. That was Katerina Vittozzi with the Business News. Thank you. Time now for the International Press Review.